Hello traders, welcome back to Black Bull FX, your go-to source for all things Forex trading, and I am Cosmos right here. Today we are diving deep into one of the most crucial aspects of trading, market structure. Understanding market structure is key to making informed trading decisions. So let's get started. Yes, today on the market structure, this is what we're going to be looking at. We're going to be looking at what market structure is, the key components of the market structure, identifying market structure shifts, analyzing the market structure shifts, and trading strategies using the market structure shifts, and then the common mistakes and tips to help you understand market structure shift. And then at the end of it all, we're going to sum it up with a practical application of what we will have learned today. All right. So let's get started, guys. Let's get started. What a market structure is that it refers to the overall direction of the trend, overall direction or trend of the market, which is determined by a series of price highs and lows, and it also shows how we identify whether the market is in an uptrend, downtrend, or sideways trends. All right. So basically, that's what market structure is, and I believe that's just plain simple. There's nothing to add on to that. It's just that plain simple. All right. So next, we're going to look at the components of the market structure. We have an uptrend, a series of highs and lows, highs and lows. In the downtrend, we also see a series of highs and lows, and sideways. We have that kind of movement there, right there. From our definition of what a market structure is we define it as some sort of series of lows and highs, and that can be seen clearly here in the components, right? Components of the market structure. Okay, now let's break it down. Let's break down the key components of the market structure. All right. We talked of the swing highs and swing lows, swing highs and swing lows. These are quite pivotal points on the chart. All right. A swing high is a peak where the price reverses from an uptrend to a downward movement, and a swing low is a trough where the price reverses from a downtrend to an upward movement. So visually, this is what we kind of see. You see here there's been a rally up to the uptrend. When it reaches a swing high, kind of opposes that previous movement, starts moving down when it forms a swing low, and that's what we have just been describing exactly, right? Okay. So in a bullish market, this is what we're bound to see. See higher high, higher lows, higher high, higher lows, higher highs, higher lows. So this is what defines a bullish trend or an uptrend market. Series of swing high, swing low, swing high, swing lows, which are termed as higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. All right. Okay. So what causes this kind of movement? That's what we call an impulsive movement and a retracement or correction move. All right. Let me just try and explain that here, and I hope you're gonna understand that. An impulsive move should be in the direction of the trend. So assuming we established the direction of our trend to be like an upward trend or a bullish trend, this is what it would be. It would look like for an impulsive move. Takes the direction of that trend. All right, and then the correction or the retracement is that. All right. So the market moves in two phases. An impulsive move is strong. is a strong directional move, while a correction phase is a retracement or consolidation period. All right. We're going to go into how to identify a market structure shift. A market structure shift. All right. And I want to do something like that here. Movement to the downside. All right. All right. Like that. And then you have something like that. Where do you think the market structure shift would have taken place? So a market structure shift happens when we had established our trend, which happened to be, in this case, let's use this example to be a downward movement. And we see a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower lows, and then these lower highs took out this previous, lower high right here. And that will act as the market structure shift right there. And this signals that we have come to the end of a downward movement, and we're gonna have to look for an upward movement. So that's what we call a market structure. So this would be what they would call a break of structure. Downward structure has been broken right here, and there's been a shift. You can call this a market structure shift or a break of structure. A break of structure, or BOS, as most people always try to write in chart, occurs when the price breaks through the previous swing high or swing low, depending on the kind of the market. All right. In a bullish market, let me try to draw that here, and we see what it would look like. Okay. I see that. You have series of higher highs, higher lows, higher highs, higher lows. Instead of forming a higher low, we see that this swing low here was taken out. Here, just right here. So that's where our break of structure happened, right? The break of structure happened right here because the previous swing low was taken out. I hope that makes it really, really clear. We also have what we call the change of character. It's often the first sign of a potential market structure shift, and it happens when the price starts to form higher highs in a downtrend or lower lows in a uptrend. This change signals a possible reversal in the market direction. I just want to show this simply here. I just want to show that simply there. I want to show you one of the most simple ways of analyzing and confirming a market structure, and that is none other than the trend lines. Trend line is the most simple and the most ignored, I think, by traders, I think, because they think it's kind of simple. Trend line, guys. All right. Trend line. These are simple yet powerful tool where you draw trend lines by connecting swing lows for an uptrend. You connect swing lows to the next swing lows, to the next, or for a downtrend, you can connect swing. All right, like that. Right, you can just connect that. Sorry, that didn't come out so nice. Let me just try and improve that. All right. you can draw that, and that would really establish what trend you're moving in. And in this, we can see that it is a downtrend. And this you can see is an uptrend. Next thing you want to do to find out the trend is support and resistance. All right. Support and resistance levels are crucial. Support is where the price stops. Let me just see if I can draw that here. That there, and then maybe okay. This would be necessarily like for a ranging market. I think to show for a trending market. Let me just show you that for a ranging market. It moves there, here, 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 like that. So if you see market moving within two ranges like that, you will know that is a sideways market, and you will have established your structure for that day, and knowing that this market is a ranging market or a sideways market, is moving within two ranges of support and resistance. All right, all right. And support and resistance doesn't need to be horizontally like this. You can draw that on a trending market as well. For example, this is an uptrend. All right, let's put that like that. This is, we can also draw your support and resistance like that. And this would be your support and resistance. This is your resistance. This is your support. So let's try to look into the charts to see if we can identify our market structure, just like this here. And I'm going to try to draw the schematics of that so that we can see very well. Okay. What are we seeing here? We are seeing series of higher highs, higher lows, higher highs, higher lows. So this makes this on this 4 hour, this market was trending. All right, because we are seeing series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. That's series for. Let's look for. Okay, see this right here. Higher high, higher high, higher high, higher high, higher higher high, higher high, higher high, higher low, higher low, higher low, higher low. Right. Now you see typical ranging market. Aha, this is beautiful, guys. This is beautiful right here. This market was really ranging from, I can say, from the whole of this. All right. That was the range. No clear movement. The market was moving in those two swings, right? Two swing level, key levels. All right. All right. You can see that. Right. So no clear movement, no clear breakout, though there was some kind of fake out here and still it came in. Right. So that's what we call a typical ranging market. That is how it looks like. And what about a downtrend? Right. Okay, let's try to use this. All right, you can see we can draw the schematics. We'll just first take that out. And that as well. Okay. If you can see from here, we have a series of lower low, lower high, 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 lower low. All right. That is it, guys. So that basically tells you the kind of market structures that we can identify, and basically they're just three: an uptrend, a downtrend, and a ranging market. So, and okay, what can we see on the market structure shift? Can we try to identify that here? Let me see. We were here on an uptrend market. All right. Okay, here it fails to even go lower. I mean higher. And see what? Did it happen here? No. Okay, yeah. I think the market structure shift really happened. It really happened. Yeah, it happened there. All right. It happened here. And there. That is a change or break of structure. It happened right there, and see why. Market went, retested that order block right there, and it started to rally down. Okay, that's for a bullish kind of scenario when the market structure shift happened here, and you wanted to enter this position for a short. All right, we look for that which is here. So that was that fair value gap I see here. So what we would do, we would just place your here and your stop loss right above there. You can put that, and you target maybe 1 is to 3. And you see, that's how we place your stop loss just right about there. And that is it, guys. That is it, guys. That's basically what a market structure is. All right. What about the common mistakes that people always have? Most traders always is to avoid common mistakes like, for example, entering the trade too early without confirmation of the market structure shift. All right. Because here we confirmed it, it happened, it came and retested the order block right here, or the fair value gap, which was right here, and it dropped down. And that was our confirmation. Secondly, you also need to use additional indicators like the RSI, all right, the moving averages, to help you confirm more of that for better accuracy, all right? And that is it, guys. One other thing I want to let you know is that you need to keep practicing these things so that you can really know how to identify the market structure shifts on various time frames, because the more you practice, the better you'll become at spotting these shifts. So that's it for today's video on market structure. Understanding and identifying market structure shifts can significantly improve your trading decisions. And if you found this video helpful, guys, don't forget to like, share, and subscribe. Leave a comment below if you have any questions or topics you would like me to cover next. Happy trading, and see you in the next video. Peace.